welcome to the Nigerian Investment Conference. My name is Toyin Umesiri. I'm your host for today, and I'm so excited to bring to you amazing speakers from Nigeria and New York, and myself as well here in Chicago. This is a global engagement with speakers and participants from all over the world. I just want to welcome those that are also watching live streaming. So our members are the Trade with Africa Network. Welcome, welcome, welcome. This is such a wonderful business to government engagement, the first of its kind on the Trade with Africa platform. We also host a business summit, but this time around we're focused primarily only on Nigeria, Africa's largest economy. Yay! So just to set some groundwork, there are two ways to join us on this network. We have the video being pushed into our network where there are hundreds of people right now. We also have this private Zoom chat. You can opt in if you want to opt in, or you can also chat. And I see some questions already that we are looking forward to address. So basically, I want to welcome our speakers. Welcome. And I also want to thank such a great support we got from the Nigerian consulate in New York, represented here by Honorable Nicholas Ella. Thank you so much for your support, partnership. We couldn't have done it. Please say hello.
Thanks so much. Thank you very much.
Yes, thank you so much. We also have representation from the Nigerian Investment Council in NIPC. Mr. Mecca, please wave. Okay, thank you so much. We have Barrister Kola Awe. Okay, I need to spotlight you. Give me a moment to spotlight you, okay? So let me start again. Honorable Ella, I'm spotlighting you. Wave.
Thank you so much. You are welcome, please.
Okay. Mr. Emeka, please wave. All the way from Nigeria. Thank you, sir. We appreciate you. Barrister Kola Awe, Nigeria, is one of our esteemed executive speakers. Please wave, sir. Yes, wave. We have you spotlighted.
Good to be here.
Yes. We have Judith. She's also one of the speakers. Yes, thank you so much for joining us. We have Sir Arnold. He was here. Can we see your video, Sir Arnold? Representing the Nigerian Export Promotion Council. Okay, when he joins, we'll be happy to spotlight him and share. I'm looking forward to what he's going to share with us. So today, basically, this event is not about just a profile on Nigeria. For me, I think everyone joining today should already know Nigeria is the largest economy. By 2050, it's projected to be the third largest nation on earth. With the population growth, it's in West Africa. It carries about 60% of the GDP of West Africa. So today I don't want to focus just on the statistics of why Nigeria. Today I want to talk about how do we trade with Nigeria? How do we invest in Nigeria? How do we close any types of gap? Today it's about how. It's not going to be a talk show where we just talk and feel good. We are really going to handle the meat of it. So to set the stage for today, I know we've been facing what people call the Zoom fatigue. Our event typically runs 2.5 days, but today we just narrowed it down to 2 hours today and 2 hours tomorrow with time for questions. So there's a lot we're going to be sharing. We are packing a lot in 2 hours. I'm going to kick off today with my own presentation of why we're setting up this event, about the AfCFTA. We're going to share global perspective and regional perspective. And then after I share today, I'm going to bring Honorable Barrister Kola Awe on for an interactive Q&A, because he is actually doing work on ground in mobilizing the private sector. And I see, okay, Tama, I see people joining now. People are going to be moving from the platform. Tama, welcome for joining. Yes, we have the chat box. There are two ways to chat. There's the Q&A, where if you have questions for our panelists, our esteemed speakers, please drop it in the Q&A section. And then you can also interact in chat here on Zoom and also in the platform. So I'm going to go ahead and quickly start with my own presentation, right? Oh, he's back.
I'm so sorry.
Sir Arnold, I'm going to spotlight you. We were introducing all our executive speakers. Please, Sir Arnold.
They took the line, so the Wi-Fi went off. I had to use the phone to connect.
Oh, we can still see you. No, we can't tell the difference. So welcome. Please wave again. But can you still show us your Miami? You remember that breeze you sent our way when we started? Your background was fantastic. The Miami and palm tree. So welcome. So I was just saying that I'm going to start now with my presentation. And then we have a lot packed into these 2 hours today. So I really want to immediately get right onto it. Okay. So like I was talking about today's agenda, it's about 4:10 in Nigeria. It's about 9:10, 9:12 here in Chicago. About 10 o'clock, past 10 in New York, where Honorable Ella is joining us from the Nigerian consulate out of New York. So I'm going to start with my kickoff presentation. And then after my presentation, I'll bring Barrister Kola Awe on for an interactive, Q&A session. So at Nazaru, what do we do? Because what we're bringing today is the global and regional perspective in terms of how Nigeria is perceived. We all know that Nigeria is the giant of Africa, and it's known as an oil-rich nation. But what we're also seeing within the AfCFTA, there's room to grow non-oil exports. So at Nazaru, we work at the continental level. We work with the African Union. Few weeks ago, back in October, I actually partnered with the African Union to deliver training to about 14 government countries on the member states on the continent. We also work with the Afri-Exim Bank, which is the government bank owned by about 50 governments, and they are the chief financier for trade, driving exports, imports on the continent. So even next week, just to give a plug right now, next Wednesday, we're actually going to be hosting the global activation for the IATF that Afri-Exim puts together. We'll be hosting it on the Trade with Africa Network next week, Wednesday. So I want to use this opportunity to invite everyone to put it on their calendar to join us. We'll be sharing a whole lot of information about what's going on at the continental level next Wednesday as well. So Nazaru is the company I created and run, and we have various platforms. We have the Trade with Africa platform network. We also host annual Trade with Africa Business Summit. Honorable Ella and his team has been a part of that summit. And we also have platforms that allows visibility for exporters, Africa's exporters. And then in August, we also hosted the AfCFTA roundtable. So one thing, the reason I'm showing this is for AfCFTA in particular, this engagement, we're not going to dive into AfCFTA. We're going to stay at how Nigeria can leverage AfCFTA. So if you're interested in doing a deeper dive, on the platform, we've released the AfCFTA Roundtable Report, which shows the outcomes of engaging the World Bank, the African Union, the United Nations Conference on Trade, UNCTAD. We brought them in. Brookings Institution, South African, was also represented, and that report shares all the outcomes, and it also contains the outlined timeline for the implementation of the AfCFTA. So I'm not going to use this NIC event to share more. I'll just reference a lot of the discussion that we had. So this slide, one of the important things just to lay the groundwork is when we talk about trade and investment, I also want to level set that along that conversation, we encounter various stakeholders. And one of the reasons this slide is so important is because I realize that if people do not know who they are engaging with and the interests of the people they are engaging with, what we found is that people are having the wrong conversations with the wrong people. So part of why this slide is so important is I'll quickly run through. In trade and investment, you're going to encounter these types of stakeholders, and what they are looking for is different. How you engage with them is different. A lot of times people in Nigeria will say, okay, we are looking for investor. One thing I try to say is, number one, so we're starting top to bottom. An investor is not to be mistaken for a developmental organization. That's the first thing I see people mistake. An investor's main goal is to generate a return on investment. So, and I know NIPC is the leading agency that handle this, but for every other person that is not in NIPC, just something to be aware of. If you're a private sector and you say you're looking for investor, the way we present to them, the way we engage with them has to sound different. Because sometimes, you know, as we're trying to shift people from the world of we want trade, not aid, the last 20 years, the narrative has been help, help, help us. Investors are not built to help people. They are built to make money. So that's why the pitch and the engagement and the interactions with potential investor has to do with Nigeria is a viable destination for investors. That's really the tagline. How to present Nigeria as a viable destination, and the language has to be, if for every dollar, so I'm hearing you, US, for every dollar you bring into Nigeria, what potentially would you get back? That's what an investor is. A development organization that deals in foreign aid, their impact and their KPIs, their key performance indicator, is different from what the measurement an investor is looking for. That's something we want people to note. An exporter in Nigeria, within the world of trade, we're looking at also bilateral trade. We have an African Nigerian exporter that wants to push under AfCFTA or under AGOA, for example. They want to export. They want to grow their output, their productivity through exports. Export is an engine of growth. No matter how, we know Nigeria is the largest market, but no matter how Nigeria market is large, the regional market is larger. And the global market is largest, if I can say it that way. So we need to start explaining to Nigeria's exporter, win locally, win regionally, win globally. Because I usually in my classes, I explain three markets. We have the local markets. For me in US is US. For those in Nigeria, Nigeria. The regional market, for me in the US, it's Canada, Mexico. For those in Nigeria, your regional markets are your neighboring countries. And then the global market, and one thing we try to call out to our exporter is that the rules of engagement for those three markets are unique and distinct. So we try to tell people, if you've been winning in your local market and you want to go regional and global, you cannot bring the same principles. The principles you use in your local market will fail on the global market because the rules of engagement are different. We have buyers, the next third one. Buyers behave differently. I'm going to lump the third and the fourth together because one thing in our interaction is that oftentimes, I'll say Nigeria, the Nigeria exporter mistakes an aggregator or off-taker for an end buyer. Let me explain what I mean. Oftentimes we say we need off-takers for our cashew. We need off-takers for our cocoa. The reality is people need to understand that most off-takers are middlemen in the value chain. They are often sourcing companies. All I want to share today is just information. It's neither good or bad. It's just walking into the room with understanding. Oftentimes, a lot of the commodity has to change hands in the value chain because organizing a market is not straightforward. So if you have a market that is not organized, then off-takers will come and organize it for you. They will aggregate your cocoa. They will aggregate your coffee. But one thing you have to also realize is they are going to aggregate it, process it, but there's another buyer that will still take it out of them when they've done the work. That buyer, I think, potentially should be the ultimate buyers that I think Nigerians exporters should be targeting. Within the context of bilateral trade, we also recognize that global players and regional leaders in AfCFTA are also looking to the Nigerian market to penetrate, to export into the Nigerian market. So there will be Nigerians that will benefit from playing the role of intermediary importers for those people. We want to just acknowledge that. We have trade financing institutions like, Bank of Industry, Nexim, and at the continental level, Afrexim Bank, like we shared. Without finance, because we've seen it, you can bring the buyer, you can bring the seller, you can bring them into the same room. Without the capacity, the financial capacity to execute on any of those transactions, everything crumbles. So that's why it's so important to always have banks in the room. One of the things that, just to show you an example, nobody penetrates a new market without their financing bank. When you think about China penetrating Nigeria or Africa in general, they will come to you, we'll do the work, and next to them is sitting their financier. Because that's like the power to execute. Also, within the context of trade investment stakeholders, we have government, like today's, thank you so much again to all the government agency partners that really, they're part of this engagement. We look forward to, engaging further. But one of the major roles that I try to talk to, anytime I have an opportunity to talk to government agency, is that the whole purpose of government is to create the enabling environment to develop policies that support trade and investment activities. And the whole power of government is that they can centralize resources and information for the private sector. Because what happens is going regionally or internationally is expensive for the private sector. It's an order, because the private sector is going to be asking the same questions. They're going to be having the same challenges. So the government has the capacity to centralize information. And that's when we talk about single window, right? Single window of information to say, if I'm an exporter in Nigeria, where do I go? Make it easy for me. Because if you don't make it easy, I'm going to be investing so much money for training, for this. And we see it. A lot of them run to us. We're happy to help, but it's expensive, really expensive for them to really acquire the capacity, knowledge to push regionally and globally. So I want to appeal to the government. I want to use this opportunity to appeal to say your private sector needs you. They need you for that single window of information, of knowledge, of capacity. So thank you ahead. I know you're doing it, but I'm saying we can do more, because the future is here for us. We talk about end consumer. A lot of times, exporters need to educate themselves in terms of who is actually going to use my product. And sometimes I try to help people to say, hey, there was one Nigerian aggregator that was telling me, oh, I deal in maize. And I said, maize, what do you do to your maize? He said, I just sell it in bulk. I said, can you do a little bit of research? The people you are selling to, can you find out what they are using your maize to do? He said, yes. I said, yes. I said, likely they're feeding it into the poultry business or into the consumption business. He said, really? I said, yes. Because the poultry business uses corn. One of the major parts of the poultry feed is corn. I said, so if you can figure out what those aggregators are doing with your maize, couldn't you package your maize and take it to that same market? He was like, wow, I'll do that. So end consumer analytics and analysis is so important so that we can understand how to penetrate regional markets under AfCFTA. We also have logistics provider. We also need to make sure we are now open to third-party agents. Let me explain. Third-party agents is so critical. If a Nigerian under AfCFTA wants to penetrate Egypt and you want to do it quickly, it's important to understand who in Egypt understand the Egyptian market. and start looking at ways to strike partnership, legal framework. And we'll share more about what that looks like. Because if somebody wants to come to Nigeria now, isn't it the wisest thing to see a Nigerian like Barrister Kolawe that understands the system? So how do we fast track winning under AfCFTA? We have to be open in structuring new and dynamic partnerships. One thing I also want to potentially suggest or recommend is that Nigeria should identify their top 5 priority countries in Africa. Top 5 priority countries and top 5 priority sectors, meaning map the country, map the sector, and see what sectors in Egypt, in Morocco, in Ghana, you want the private sector to penetrate, and start building strategy around that. The other thing I just want to also share is this framework we build, and in our master classes we go deeper, but I'm really racing against time right here. Because a lot of times when we say trade and investment facilitation, when we talk about investment conference, people, when we say trade, people see it as trade. And a lot of times people in the private sector, they distance themselves from it because they see it's a big word and they don't know how to relate with it. Our attempt is to make this simple. Trade is buying and selling. Buying and selling in your local market versus buying and selling in your regional market versus buying and selling globally. But the rules are different. And we try to break this down to say trade involves managing seller-buyer relationships. It involves market access development. It involves export promotion. On the right side, my right, investment includes extreme partnerships, because the investment you might need might have to come from a different source. It might be from Nigeria, but the truth is foreign partnerships is important. Investor relations, remember, investors are looking for return on investment. This is not in the world of aid, when there's really not, the KPI looks different, okay? And then investment promotion. And underpinning trade and investment is a solid legal framework, because if a Nigerian and an Egyptian come to a trade deal, you have to decide which country's law is going to govern this transaction. Is it the Egyptian law or is it the Nigerian law? So now we need people to start understanding law frameworks of other countries under the AfCFTA. Trade financing is underpinning on both sides, because even for investment, even when you have investment, for example, one of the largest private investor in Rwanda is a friend of ours, and is the single largest private employer. Is an American firm, and he aggregates coffee, and those are information we've shared on the Trade with Africa Business Summit platform of how he aggregates coffee from 50,000 farmers and feeds it into the Starbucks chain, Sam's Club chain, Walmart chain as well. So those are capacity building. But one of the things that people don't really understand is that an investor also has to have banking support. An investor also has to have banking support. And one of the things Scott Ford shared with me was that when he was looking to invest in Rwanda, for example, about 10 years ago, he said US banks weren't ready to give that fund because they were questioning his investments. This is an independently wealthy person, a millionaire. He's bringing his money, but he is going to finance his investments in Nigeria. But he also needs more capacity, and he's plowed in over $100 million into Rwanda. Trade policy management is something both the private sector and the public sector must keep their eyes on. I can spend all day on just that alone. AGOA, opening US markets to Nigerian goods. That in itself is a topic, not for today. I cover it in terms of why Nigeria has not penetrated AGOA and what we're doing in terms of how we are helping people build capacity. The AfCFTA creates new dynamic opportunity for Nigeria's exporters into the African market and beyond. And then trade information, that's key. When I talk about digital disruption, one of the things I talk about is trade information must now be available digitally. long as, with COVID-19, we've seen what has happened. We now need to make sure all the information we need can be accessed digitally. It could be like in our platform, it's a private space where people have to log in, so there's security. But at some point, we need to start making sure everything is digitally available. And then trade and investment monitor. I think this is an opportunity for not, African governments just in general, because I see across the continent is that a lot of times we go after interventions, we run the year, but we don't come back to see how the intervention, was this successful? Do we need to adjust it? What were the results, the outcomes of those interventions? What deals? When we do export promotion, did anybody get a buyer? What is the value of that buying deal? All of those things are things we now try to help people to monitor, because as we're going forward, if you don't know what interventions are working, then how do you know what to keep investing in? Then what might be happening is we're just trying everything. We're just doing everything, but we don't know which one is working. But if something is working, as they say, don't fix it. Just ramp up further into those interventions. Now, probably this slide, in my opinion, might be the most important slide today. There's a lot going on this slide. What I try to share on this slide is individual and national prosperity. Unfortunately, we've seen the data when it comes to, poverty numbers and people living below the poverty line. But this slide is one thing I want to use so that we know what the opportunities are. On the left side, I talk about government wealth. On the right side, I talk about private sector wealth. How does the government make money? And how do the people in a nation make money? How do you build wealth for the government? Because the government is not the only one that needs to get money, So let's say in oil-rich nation like Nigeria, that money, the way the flow of that money is, it's the government that does the deal. They are the ones that own the mineral rights and all of those things. And then they allow private sector or foreign, companies to come in. They give them rights to drill. The flow of money goes into the government, but we forget that government also has expenses, employee things, all the things the government needs to run itself. So that money can start as BB, we all Nigeria say billion. It will start coming to million. And by the time, the question is, how does that money get into the hands of the people? How does it get? What's the flow? The reality is the only way to get into the hands of the people is through infrastructure development, maybe roads, resources, things that the government does to better the lives of the people. That money doesn't really put food on the mouths of the people, except if private sectors are getting government contracts, right? So if they're getting that's the way they'll say, okay, we're making money. But there is another path for wealth for the private sector, and that's what I share on the right side. Is that the private sector needs to realize that hanging on to the government is not the solution to individual wealth. China has created more millionaires in the last 20 years than they have in their last 200 years of their existence. How did they do it? They created those millionaires under trade, private sector dynamic engagement, B2B trade deals with the world. Not the government, private sector. The private sector going out there and learning how to fish. I have lots of story I can share. I mean, like this Ashoke. When somebody buys from a Nigerian exporter, that money goes into the hand, not the hand of the government, it goes into the hand of that private sector. And the only way the government gets anything is through taxation. It's through taxation. So we have to grow. In order for us to build population wealth, massive wealth in the private sector, we have to grow this transaction. It's not the oil. Oil money is not what's going to make people rich in Nigeria. Oil money makes the government rich, which is fantastic. Like Saudi Arabia, you can help us to build the roads. You can help us to build this kind, those big dynamic visionary projects. Yes, but that doesn't put food on the table of the private sector. So what does? What do we have to do? Capacity mobilization, export development, and industrialization. Those are the three things that has to be focused on to drive private, because if the people of Nigeria, they are rich, the government will be rich. Or richer. Let me put it that way. The government of Nigeria will be richer because you have more people to tax. You have more people, you have more trade transactions to go after. So on the bottom, I said, on the right, and the people do not necessarily prosper. The government spends oil money on the things like infrastructure, and government has to run. To run the government is expensive. When you look at the budget, healthcare budget, this budget, but the way to prosper is B2B deals. Right now, if you want to buy anything from China, you just reach out to the private sector directly. You don't even need to know who the government is. You don't even need to know who the president. You don't even need to know who governor. We don't even need to know who the government becomes invisible. They are supposed to be backing and pushing the private sector. The private sector will be in front in this deal because the private sector is the one that will close deals. I can manufacture shoes. I can manufacture textile. I can manufacture plastic bottles, ceramics. We need to push the private sector to go after that money. Because when they go, they're going to employ. That's where employment. A factory would employ 500 people, 1,000 people. That is what we have to go after. If you go after a deal that allows you to manufacture 1 million pieces of a t-shirt, so how many youth would it employ? How many youth would it employ? That's what happens in the private sector. So for me, this is the most important slide because we need the government to be rich, fantastic, but we also want the people. We want to go all over the world and say, not just, oil rich. No, the people, Nigerians are rich. That's what we should go. Like, don't mess with the Nigerians. That's the future I desire, and that's the future I hope to live for my children, where Nigerians becomes the richest people on earth. We have everything that we need to make that happen. In trade, these are examples of trade items, and these are things we go deeper dive in our master classes. Again, I'm looking at time. I'm racing against time right now. And then within investment, we've developed this framework because what we try to see when we engage with investors on this side is that they're like, okay, Toyin, trade with Africa, okay, trade Nigeria. Where do we start from? What are the opportunities? We develop this framework because we say investors are looking for enabling policy to say, who is going to, they see it as the roof. If I bring my money into Nigeria, is it protected? Because, is it protected? That's why we have it as a roof. Again and again and again, over and over, we hear investors are saying, oh, is my money safe? Can I bring it in? Can I take it out? That's what they care. Again, they're not developmental organizations. Investors are looking to make money. They want protection, enabling policy, fiscal responsibility. And then they're saying where? What we've now said is there are 3, pillars. Agriculture value chain. Africa has 60% of the remaining arable land, in the world. Again, Africa has the 60% of the remaining arable land in the world. So the world knows that. Food baskets in Nigeria. We have land. We need to build agriculture value chains. The middle pillar, manufacturing, retail, distribution. Retail always goes ahead because when you have platforms where things can be sold, people will start manufacturing and pushing it through. Underpinning, we know healthcare, human capacity development, training, enabling technology, trade, import and export is important because in building up these pillars, we're going to need to import what we don't have, machine equipment, everything, and then we're going to export what we produce. And one of the things I also want to share, very, very key at the base, is real economic development is always achieved at the local level. I've seen it here as I work with economic development organizations here in the US. There's the federal, there's the state, but the local level, the city, county level is where investments penetrate, is where investments land. Yes, at the federal level, we could be talking about trade and investment, but all those activities has to land in places like Ota, in places like Aba, in Kano. The local people, that's where economic development happens organically. And again, I have so many stories of being invited to a global summit of ecosystem. They call this ecosystem leaders from all over the world. And when we all sat down in the room, I was the only one, African, even though it was here in US, New Orleans, and everybody, we sat around in circle, and we were all brainstorming, and we were listening to people from Germany to Canada, all over. It's like, how are you building the economy of your city? Of your city, not just Nigeria as a country. The conversation was city level. And what I realized in that circle, people were telling me in Canada, in Calgary, in Toronto, the reason you know all these big cities like Chicago is because at the city level, the city government, the private sector, and the investors in the city, they're sitting at the table and designing the economy of their city. They are looking at the city level, not this big national, what's happening in Washington, D.C. No, Washington, D.C. is one. They are not deciding what's happening in my town. They're not the ones they're not the ones driving the economy of my city. That's another thing we want people to start seeing. That at the local level, if you're in Abeokuta, if you're in Ota, if you're in Aba, if you're in Abuja, please look within your city and start working together. That's where, when you think about the success of Computer Village was not created in Abuja. It was created by the people in that town. That's the way forward in driving economic development. It's at the local level. And that's why we designed today's engagement along that line. This is another slide that we cover in our masterclass. I'll just pick a few things. Everybody says they want trade, not aid. But one thing I realize I have to explain, what's the difference? What's the difference? How does it operate? Foreign aid is a crutch. It has its place. It's unpredictable. It's not sustainable. It makes you dependent. It doesn't drive creativity in your private sector. I don't want to share too much. There's so this is a lot. But foreign aid is a crutch. Foreign aid cannot take credit for where China is today. Foreign aid is not going to take a nation like Nigeria to where it is trying to get to. Trade, revenue generated for the state, from the state or the business community based on delivery of goods and services locally, regionally, or globally. That is what drives innovation, creativity, and industrialization. It's the true engine of dynamic economic development. 20, 30 years ago, everybody say, oh, China, poor quality, but they started where they were. Today, they have Toyota, global, world class. Trade is start where you are and start improving, start innovating. Because before you make that $1, you work for it. It brings pride. It's sustained. It's an employer of labor. On aid, a lot of times when you receive aid, 80% of that execution has to be fulfilled by the government, by the private sector of the government bringing it into Nigeria. It's the rule. It's their taxpayer money. So for me, I'm entitled to participating in USAID, executing contracts in Nigeria as a taxpayer in the US. I get first right to execute that contract, not a Nigerian. It's, and trade is controlled by the laws of demand and supply. You cannot fake it. You have supply, you need to go and find who has demand for your product. That's the way. And in doing that, you'll be creating a supply chain, your transportation. You'll be creating efficiencies in your supply chain, knowledge, expertise within the private sector. So that's why this is important, because a lot of people, the narrative is we want trade, not aid. But this slide is, do you know why? Trade is the answer for Nigeria. I talk about digital disruption. I only mention maybe a few. When I talk about training, we're here now doing this virtual engagement. It's part of COVID-19 digital disruption. We need more of it, not less. The other thing I want to share from this slide is that, do you know that, for example, China and the rest of the world are capturing trade opportunities online today? They are mining it. They use computers to mine every day. They run machines. The machine scouts the internet for new RFIs, RFQs, requests for proposals, requests for information, all of those things that are published online. They actually use computer to mine any new one, to alert them. So every day when they get to their desk, they're like, okay, this RFI, which one are we recommend, responding to today? Which one can we sell to? Which can they're doing it online today. These are new skill sets that we must now empower our youth so that they can win online. Digital skills. Trade is happening digitally today. Right now, as we speak, people are buying and selling millions, billions on the internet. Look at Amazon. We just launched on Amazon. If my brand, which actually carries a Nigerian name, Omoba, just launched on Amazon. Billions are moving. This is an e-commerce business with a fantastic supply chain warehouse infrastructure. That is Nigeria needs that. That is a ripe opportunity with what I'm seeing in the technology space in Nigeria, with the likes of, Konga and all of that. The growth potential needs to be invested in. And we have sample scenarios that we walk people through just so we dive, but I won't go deeper in this because we're going to move down to Q&A. But we cover, export development training. But one thing I also want to share before I close this, I shared all the possibilities, but I also want to share the gotchas, like watch out, like what are the derailers? What is preventing trade and investment from moving forward? The reality in the world of business, anywhere we go, anywhere in the world, we only do business with people we trust. I mean, that's known. We only shake hands because a lot of the transactions happen based on handshake before money moves in the bank. The money moving in the bank happens when a PO is generated, when invoices are set. But before those instruments come into the conversation, you actually shake somebody's hand. You look into their eyes and you shake their hand and you're like, okay, this person has capacity to deliver on their promise. So that's something we need to continue working on to improve trust. It's a currency. The currency of trade is trust. It's not money. Money comes after trust. Trust is the currency of money, of trade and investment. When people trust, they're going to throw you money. They're going to close it. They won't even think about it. What we also see as derailer is lack of service mindset. Nigeria is an oil-rich nation. The world of oil behaves differently, where because of what people need from Nigeria, Nigeria is the king, and then people bow. But in the world of non-oil exports, the role is reversed, in the sense that if I, as a buyer, can get the same thing with little stress from Bangladesh, from India, from Rwanda, why should I bring my buying capacity to your space? What it means is the roles are reversed. So it's service mindset, through partnerships. The global market operates in a different way, and the regional. Depth of knowledge is also something when we talk to private sector this is the time to invest in knowledge acquisition. It's going to help people, prevent people from spin. I've seen times when people spin around for a year. They say, I want to do this, I want to export, I want to, and then a year after, what have you done? I'm like, I'm still. So knowledge, acquiring knowledge, like one of the past presidents he said, if I want to cut a tree, I will spend more time sharpening my axe, or the axe first before I cut the tree. Because if we cut a tree with a dull axe, it takes longer and it churns out more energy. So you think because you're spending energy, you're successful. No, it's all about results. And then expertise and background, and then network, professional network for those in the private sector. You have to grow it as well. And then we have to be patient. I just said we launched a brand. This is work over a year. Work that took over a year. So a lot of times people say we want to go global, we want to go regional. And I'm saying, are you ready? Are you ready? It takes time. It takes dedication. It takes commitment. There are processes that has to be followed. The global market and the regional market will not change. For example, AGOA, even though tariff barriers have been removed, non-tariff barriers still has to be overcome. And it takes months and it takes dedication. But I tell you, Nigeria has it. We have the energy, the fortitude to push forward. And I'm so excited to be able to, support this journey as well. This is a picture from our first Trade with Africa Business Summit held in 2018. We're now in our 4th year. We're planning the 4th edition. But one of the things I want to call out, even when we are talking about regional and global, there's a report here that World Bank chief economist gave me. And in that report, it said, even though the United States represents only 4% of the population of the world, it controls 40% of global wealth. I was blown away. I was blown away. So what it means is that there is more opportunity for US, at least specifically US-Nigeria trade. US only does about 2% of global trade with sub-Saharan Africa. Most of it is extractive resources. If you were just to grow that number by 100% to 4%, that's billions already. So I want to appeal. You have Honorable Nicholas Ella in New York. I want to appeal to the home country agencies to please partner with him. He is sitting in the US that controls 40% of global wealth. The investments is here. We work at the grassroots level, Chicago, Arkansas, agriculture. For me, that private sector is where I play, but he is on the policy side. And I want you to tap into him more. I've also discussed with him that I don't want us to wait another 1 year to do this type of engagement. We need to keep that conversation going. But on that note, I'm going to yield now and move a little bit into our our Q&A. I hope you all saw my slides. So I'm going to move now into, I think I almost want people to just take a moment. I know I just offloaded a lot of questions. Usually for our global events, I usually give like breaks in between speeches, but let me just take a moment. I know I just poured a lot. I'm very excited. I'm like giving a lot of information, but I just said, okay, maybe before we move to the next session, let's just take a moment here to say what I shared is just a tip of my 3-hour masterclasses that I train governments in terms of mindset shift and how to go after trade and investment. And then we do export development that is specific on products, on sectors as well. So for us, we just believe that the timing is right to grow exports and to attract investment at the local level, at the regional level, and at the global level. And Nigeria has everything it needs. And I want to thank you all for this opportunity to share this with you. And, I know there might be questions. If there are questions, please drop it in the chat, on the Q&A space, on the platform. We'll get to it after our engagement. And now I'm going to quickly shift to my Q&A section with Barrister Kola Awe.
Thank you.
Thank you, sir. Thank you, sir. So give me a moment to pull up. I just want to read a little bit about Barrister Awe. It's you know, we have full bio on our platform, but I just want to quickly share about him because he's just amazing. All my interactions with him has been incredible. Barrister Kola Awe is the MD and CEO of XPT Logistics International. He is a legal practitioner that invests actively in the development of the Nigerian economy, in youth empowerment, and the mobilization of women and mainstreaming of women in trade. He focuses heavily on export development and promotion. He is an exporter of over 20 years with export experiences that cuts across the agro and manufacturing sectors. He loves to equip people with tremendous experience. He teaches them. I mean, he's just, my interaction with him has been incredible. He has worked with organizations such as USAID, serving as consultant, and he's the current chairman of the export group of the Nigerian Association of Chamber of Commerce, Industry, Mines, and Agriculture, also known as NACIMA. I don't know, for me, within the private sector, right, I don't know who else I could have just said, let's have a conversation. Let's have a conversation because we talk offline. Yes, please speak.
Thank you very much. Thank you very much. So it's nice. It's wonderful and nice to be here. And I think I'm blown away by your presentation.
Oh.
And by the way, we're going to make a request. Maybe you can share it with us, or also further enhance our knowledge.
That's okay. One thing I will do that I will share with everybody. I actually have a 3-hour masterclass of more. This was just okay. I have 45 minutes. What can I talk about? So I have on the platform. I have 3-hour masterclass called the Africa Trade and Investment Facilitation. I would make it available to everybody that signed up for the Nigerian Investment Conference. It's a class that and next year I'm going to be having that class as well. Like I worked with the African Union Commissioner for Trade and Industry, the Department of Trade and Industry, and they actually invited all the governments, like, you know, to do it. And anyway, thank you. I would make that available. And then what I'll also do is we've done 3 classes in the last two months. The next class, I will make sure to also extend an invitation to everybody here, because, you know, the recording is one thing, but then the interaction that happens after is always very dynamic.
That's the ultimate part of it.
Yes. So, Sam, there are questions. I want to just dive in right now. Straight on. You are in the thick and thin.
Yeah.
You know, because I want to, a lot of times when people do investment conferences, you know, I know we sometimes engage ambassadors, you know, the top people. I get it. But for me, this was like, we need meat. So that's why I was very particular to pick people that are in what I call the thick and thin, like the eye of the storm. That's who you are.
In the middle of the storm.
You are there. They are pulling you all over. So my first question to you, sir. What are the top opportunities you are seeing? And what are the challenges you are facing in mobilizing the private sector capacity to win locally, regionally, and globally? You have the floor.
Yeah. When we're talking about mobilizing capacity, it's a tough one in a country like Nigeria. It's really very tough. Tough in the sense that the system itself have not been able to define the roles that they want to play. Really, the government has a role. The private sector too has a role. But you find that most of the time they're trying to work at cross purposes in the area of, particularly the area of mobilization and as it relates to Africa Continental free trade area. What do I strictly mean by that? The truth of the matter is that the organized private sector in Nigeria should come to the reality that mobilizing capacity is their responsibility
Mm.
in whatever form.
Wow.
In whatever form. Like you said something the other time, you said the role of the government is just to create an enabling environment. That's the role of the government. So even if the government is not creating the enabling environment, which is just natural, government cannot do everything. The organized private sector has the responsibility to find a way around, within, or through it. It is imperative. The success of trade, it's not only for the government, it's for the private sector. The impact of the success also is for the private sector. So I say to myself, the private sector has a key role in mobilizing, particularly down with the African Continental free trade. Nigeria today have signed for it, and in terms of mobilization, I cannot say that we're really set for mobilization, truly. And when I mean mobilization, I'm talking about where we have majority of the business enterprise, which is in the MSME sector. We're not really set, and they've not been prepared for the African Continental Free Trade Area. Wow. We can, a lot of people might want to say that we said, when we look at the large industries, the multinationals, in Nigeria, basically they are said, they can mobilize capacity for themselves, they can mobilize finance for themselves, they can mobilize infrastructures for themselves, they can mobilize everything that they need to take advantage of the AfCFTA. But we can't say the same for the MSME. And the truth is also that most of the third world countries, most of the top countries, Asia, America, US, and other continents, they're looking at Nigeria when it comes to the African Continental Free Trade. And the Nigerians are looking at is basically the product, not of the big ones, which are no more than 125 companies in Nigeria that you can consider larger multinationals. They're looking at the small companies who are in about millions to compete with them and eventually probably throw them out of the market. And that is where the mobilization should start from. And now, where do we start from? Data. You said something, product map, country map. We can't wait for the government to do a product map and country map. the private sector should start. They should have done this one since we signed in May, because it probably caught most of us unaware that we're going to be part of the African Continental. The discussion was going on off and all of a sudden it came in Guam. So now it's been there. So the idea is, how do we now get, what are the products that is coming from Asia, that is from America, that is coming from Canada, that is going into Africa? Do we have a comparative advantage about that based on the duty-free arrangement and other infrastructures that's put in place? Those are the things that we need to be looking at now. So that, like, for example, in the pharmaceutical area, there's a strength, but we're not working on it. In the petrochemical area, there's a strength, but we're not working on it. In the food and beverages, there's a strength, but we're not working on it. How do we work on it? Where is the bridge? Where is the link? Where is the institutions? Where is the trade policies for the region, for even the ECOWAS region, not to talk about the African region? Where is the policy? What are the rules? What are the infrastructures put in place? These things are upset, and these are what we need to mobilize at this point.
Wow. For
us to be able to be part and parcel successfully of the African Continental Free Trade Area. So there's a lot of responsibility on the part of the private sector. And I say to all the organized private sector, from NASIMA, which I'm also part of, to MAN Export Group, to NASMEN, Nigeria Association of Small and Medium Enterprise, to NASI, and every other private institution, that there's a big market that is open up for Nigeria, 1.something billion. And this is the biggest economic bloc in the world. That's a huge market for us. So it is tried that all the OPS, in spite of the deficiencies, in spite of the government's policies and so on and so on, to find a way, always find a way to see how we can bridge and make sure that we take advantage, protect our industry, protect our SMEs, and then take advantage of the African Continental Free Trade Area. That is the key point. Data. That is the key point. We need to start working on trade maps. We need to start working on product maps. We need to start looking at those people that have comparative advantage in those products, those countries that they need to be going to. We also need to also redirect our capacity in terms of finance. How do we put resources, even if there's a market? Like you said, we might get the market, but there's a need for resources for it to be going there. So the government was, that's where the private sector, in the banking sector, I'm not talking about the Exim Bank, I'm talking about the banks, the private sector banks too, to alongside work in tandem with the vision there'll be nothing wrong if one of the big banks in Nigeria open up a credit facility for somebody in Congo to buy from Nigeria, which is what the Chinese government does every day. $200 million facility for Liberia to do all their purchases from Ghana. There's not really wrong. So it's not the banking industry or the private sector should look at it. The OPS also should work in tandem with them for us to be able to take advantage of this African continental free trade area. It's key.
Wow.
Mobilizing this thing is key, and then we need to do it as a matter of urgency. In Nasima, in our little way, we've been working as serious. I saw some of your posts. We have a platform online platform for our members right now. We're going to blow it up. We're going to register. We're going to launch it sometimes in next year, early next year, just for the members, so that we can expose their goods down to the African continent and then and beyond. We've mobilized finance. We set up a cooperative for ourselves so that we put in money together in case there's an issue for finance. These are ways and manners we can work around the inefficiency in the ecosystem so that we can still achieve and take advantage of the African continental free trade.
Wow. You've said a whole lot that, okay, number one of the things that is known, even here, everybody knows this. I just want to reiterate it because you said it. The small, medium-sized enterprises, actually, SMEs, even here in US and anywhere in the world, they are actually the one that move the economy, not the big ones.
No, they are the stronger legs.
They are the stronger legs. They're the ones that create the most jobs.
They feed the large industries.
Exactly.
But it's not the same here.
Exactly.
The large job is a standalone industry here. The large industries are standing. The micro is standing on their own. The MSF, the small is standing on their own.
Yes, and that's why
there must be.
And that's why even this COVID era, the US government has done more for the small prices, like the restaurants, the mom and pops, like the neighborhood market, like the barber, like the small people that employ 1-2. They have mobilized, they pushed funds into their local banks, cooperative bank, whatever bank. They're like, take money, take. We don't want these things to fold up. If they fold up, the economy is gone.
Yeah, because they're in the majority.
They're in the majority.
They're the highest employer of labor.
Yes, and they've also, because I get all this, they have training, webinars every day, how to use social media, how to do this, how to do internet. Like, they are bombarding the SMEs because now that they're so crushed, they can't afford to do any training themselves.
Yeah.
So women enterprises email me, minority this email them, and they're like, and then the other thing is they've also ramped up export. How do you have to export to this market? And they focus on SMEs. So I'm just reiterating your point.
But the export aspect cannot be underrated in Nigeria currently. Now we're having a complete deficiency in our FX. So there is no way we can earn more foreign exchange except this country export. Otherwise, the devaluation will continue. We're at 485 in the black market. We're 379 in the official rate. It's going to continue. If we don't do something about it, it's going to get to 1,000 naira. There's no two ways about it. And export is the way out and the only thing that can save this country. And then that means we must build institutions both from the public sector and from the private sector. At this point, it is critical. But the challenge is we still see it as a natural business every day, the same way we do business.
Business is not easy. I think that's also the appreciation of what you're saying for me is that building a business is not easy. And when the government knows what it looks like, that's why they support with policies. It's like, we will help you be successful because we know it's like you're literally holding the economy up.
Yeah.
The government needs to see it as the people holding the economy up are being crumbled.
See, the truth of the matter is that there's a popular saying that success has so many children, it's failure that is a bastard. Nobody wants to know about failure. Wow. If we in the private sector, we don't want to mention names right now. You'll see some companies that have been able to create impact in the private sector, and they have all the support of the government. Why? Because they've been able to prove success. The government does not have any alternative than to associate with them. But they are from the private sector. So if a OPS in Nigeria start creating such models of success, then it becomes easy for government to come to the realization that this is the engine room. But when we stay and we criticize and we complain, we all stay where we are, which is where we are today. So we need to walk around the system, walk within the system, walk about the system to create that success for government to see and realize that, oh, we need to be here. We need to create institutions here. We need to create policies here. We need to slow down on health. We need to slow down on education and concentrate a little bit on trade, so that considering what is coming in from the trade aspect. So that's the way to go.
Wow.
And the responsibility is not on you. The SMEs and the large industry, they are operating like silos. Do not break the barriers, bring down the walls among them, and let's integrate together, and then show the government that this is where you need to be. 18 million SME members are here, and if one is employing one person, you know how many people they will employ? That's massive.
It's massive.
So mobilizing capacity in that front is just key now. It's key for us in the private sector, and I want to appeal to every OPS, every organized private sector, every cooperative that have thousands of members or hundreds of members to start mobilizing whichever way they can do it.
Wow. So I want to shift a little bit. So now I want to shift to investments, because every scenario like you just described is actually an opportunity for an investor. In terms of Nigeria is ripe. Nigeria is an ideal. One of my mentors from Vietnam told me, he said, Toyin, everything you're telling me about Africa is what we faced 15 years ago. We were begging people to come and invest. 15 years. He said, today we do them. Our market is secure now. If you want to come into our market, Vietnam today, you will sweat. He said, but 15 years ago, we were begging. The government was appealing. They were giving incentives. He said, but the people that took the risk 15 years ago, he said, they now control the market. So even everything you're saying, for me, it spells opportunity to tap into, to help, to support. So specifics, if you permit me to say, I know you're working in textile, you're working in commodity, you're working in different spaces. Those are sector-specific opportunity for an investor. So if you're presenting to an investor now, which would be the top? Because AfCFTA, for me, export development has to be strategic, because resources are always limited anywhere in the world. So when you pick a sector and we say we want to resuscitate the textile because there's something beautiful about textile. I'll have the opportunity to share more, but the supply chain of textile is actually, it has a higher return on investment. It's also a low hanging fruit in so many guys. Like if I draw the map and I tell you what happens if you fix your textile industry, it touches so many things, from labor, from supply chain. It touches because there's already a ready market. Like if you produce now, in fact, the market is waiting for you. We are the ones that have not caught up to the market. I once shared with one of the biggest buyers. I told them, Black Panther movie. Everybody remember that Black Panther movie?
Black Panther, yeah.
Yes, that movie, in the retail world, which I'm from, when you have superhero movies, we actually sell more merchandising than the movie itself. Because if you say Superman, people will be carrying merchandise. So merchandise and things we produce, manufacturers produce school bags with superhero, with bags, right? When Black Panther came and the theme was Africa, China was the one producing swords.
Everything.
African swords.
Yeah.
African outfit for Black Panther. I was like, supply chain. So investment now, for investment sectors that you are seeing that is ripe for people to bring investment into.
All right, thank you very much, Toyin. Basically, I have a bias for export, so I'm going to talk about investment as it relates to export.
Yes.
We're looking at Nigeria currently should be looking at an investment FDI, not to take advantage of the 200 million population that we have, but an investment that is export-oriented. An investment in Nigerian in any sector of the economy that is export-oriented. And the first one that comes to mind, even before textile, is the value addition.
Yeah, agro process.
Is the value addition. We have huge arable lands. We are number one in yam. We're number one in cassava. We're number one in soya. We're number one in soya beans. We're number one in soya beans. We're number one in share. We're number three in soya beans. We're number one in share nut. We're number two food agriculture. Our numbers, we're number one in the raw production. Until date, since 19 till now, we're still in the process of exporting raw. Even in our cocoa that we've been exporting since the 60s, we're still in the process of exporting raw. Now, what does that say to you? That means there's a vacuum, that there's a real investment in our value addition. Let me give you a typical example of value addition in terms of the impact it will make on Nigerian economy and earning of foreign exchange. A ton, 1 ton of cashew nuts, 90% of our cashew nuts goes 99.9, what am I saying 90%? 99% of our cashew nuts are exported raw, and they go to Vietnam, Asia, Vietnam, India, China. These are the key places. Vietnam and India and China will do what? We process it and send it to Europe. Now, that means the nut industry in Europe is predicted to grow by 29%. That means there's a huge business in terms of nut. But is Nigerian playing in that area? No. And what is the margin? It's 1 times 10. A ton of cashew today by last season, it's about $1,000. 1 kilo of cashew kernels is $10. Now times it by 1 ton. So we're talking about $10,000 to $1. So that means if we export the value addition product, we get $10,000. But when we export the raw, we get $1,000. That's that. Then let's go to other areas. All the agro commodities across board, which Nigeria is a key player in terms of where export, they need value addition. We need investment. Investment in terms of equipment, investment in terms of finance, which is very key because some of these industries are extremely on the inside. And if you see the way we process, the little people that are able to export, if you see their processing pattern, you find out that this is not the right way to do business. And that's why you see that most Nigerian companies have not been able to get EU certification, American certification, or DEFRA certification from UK for them to be able to export to this country. Why? The value addition process is cumbersome and lacks structure for them to be able to carry out this thing. And if we have 1, 2, 3, 4, then we start playing in the value addition, and which is where the strength is, and which is where the safety net is for Nigeria at this point in time, whereby we can earn more foreign exchange. Another area that is good for investment is in the logistics area. Logistics area is extremely very the cost of logistics, logistics is everything by foreign shipping lines. Even in the local balance, also, the industry is still dominated by foreign shipping lines. So there's a big opening there for regional vessels. There's a big opening for regional shipping line that will just go between Nigeria, within West Africa, go to Central Africa, and then they come back here. Because if the AfCFTA starts and we're depending on this shipping line, rest assured the cost of freight might make it difficult for Nigeria to compete in some of these West African countries. Let me give you an example now. From here to Liberia in West Africa for a 40-foot container is $2,719. That's close to ₦1 million. You can imagine that. From here, from Nigeria, the same 40 foot to Vietnam is $450.
Half of it.
450. What is that? That one is $2,719.
Oh, wow.
The other one is $450. Now we're saying the FCT is coming in.
It's based on volume. It's usually the volume. So that means the volume.
So you see that instead of them to buy from Nigeria, we don't have comparative in everything. Cocoa is in Republic of Benin. Cocoa is in Ghana. Cocoa is Ivory Coast. Shea butter is in Republic of Benin. Cashew nut is there. It's in Guinea. It's in almost all the countries. So when logistics is throwing you out, you find out that you cannot compete. The market is there for you, but logistics cost is throwing you out. That is why it's very difficult for Asian countries to import palm kernel shell. We are one of the largest producers of palm kernel. Everybody knows. The shell, we can't export it to China. Why? Because of cost of logistics, not cost of product.
Wow.
The cost of logistics. So they go to Indonesia, they go to Malaysia, which is closer to them, and buy these things from them. So I find it difficult to come here. So you find out that if logistics investment is not done in the area of logistics, we're looking at the market, but we can't get there.
Wow.
And by the time you get there, your cost is high, and you're not competitive with your next door neighbor or next door country. So these are key areas that I believe that foreign direct investment will do well. Then in an information technology, if we have a company that is into trade data today in Nigeria, the company will make a lot of money. They have complete trade data and data analysis that we can go online.
Let me even. This is so funny. So on the platform, every week I host a community Zoom. One of it, there was a gentleman of Asian descent sitting in Canada. And I was like, okay, what are you trying to do? He said, oh, he's looking for data. He was like, he's looking for data. Okay, he was like, what do they import? This, so I can send it. I said, my brother, you are there in Canada. It's easier for you to go online, get what Canada is importing than what that data you are chasing. So what you said is it's real, it's practical.
Data drives business. You understand?
Yes.
If you give me the data, it makes it easier. We have 54 countries that have signed on now, about 53 countries. And I have data of import transactions to all West Africa countries. And I look at my members, I look at the companies I work for. I say, you have a better opportunity. And so now let's look at the cost of infrastructure and the cost of movement and see whether we can compete with goods coming in from third countries. Because the goods will still be coming in from third countries. They will still import from China. If our packaging is not right, if our labeling is not right, they will still import from those countries. So we need, as a matter of urgency, to start putting in place policies, trade policies, and institutions that can support trade. And one of those ones that I support so much is the trade house concept.
Can you share more a little about that?
Okay, the trade house concept is not a novel concept. We're not inventing the wheel. It's something that is on every month. But it's something that is critical at this point. Why? Because we're dealing with huge numbers of MSMEs that will find it difficult to put up their cargo in one container, or they'll find it difficult to put up their cargo in one trailer. That if they decide to go by the way of informal export, it becomes more expensive and impact on the quality of their product, because they will just load it anyhow. They don't give a damn how the loading is taking place. So we need a bridge like that now for us to take advantage of open MSMEs into these markets. Because these markets will come, we need to open them into the market. And the vehicle that can open them into the market is the export trader, is the export traders. In as much as we're working on it seriously right now with the Nigerian Export Promotion Council in establishing the export traders, but it's something that we need like fast before the whole thing starts. We need it but we need to move very fast. We need to have our clear-cut plan, how we want to invade Africa, South Africa, East Africa, Central Africa, and have it all mapped out and say, this is what we're going to do. Probably we're going to start from here we go tail into the other. The trader concept will save a lot of issues. It will grow the SMEs. It will impact on the poverty level positively, and it will increase job creation, because the SMEs are the largest employer of labor. And if you can boost their production and you can boost their sales, they will employ more.
That's it.
And when they employ more, their poverty will be reduced in Nigeria. But if you leave them as a unit, they cannot export. Maybe somebody in Angola says he wants 50 cartons of his product. How is he going to export 50 cartons? You want to give it to DHL? Oh, no. The company is all. The company is all written out. There's no group A transaction from Nigeria. Not like in China, you have group A transaction. Nobody does group A in container. Take care. It's not. So we need to have a trade house to be able to support some of these things. And the private sector investment in that is a plus. Because every channel of the trade house is revenue generation. Every channel of the trade house is revenue generation. From product registration, you want to come to Angola, you need to register with Angola. You want to come to Ghana, you need to register the Food and Drug of Ghana. It costs you a lot of money for you to come to start going to Ghana, so and so. But there's a trade house to represent you. It does everything. It charges a certain commission. when you want to move your goods by road, because the traders has invested in his own personal truck, it's cost plus. It's not all margins. You understand? He's able to move your goods for you conveniently by road. It does market research for you. It does market intelligence for you. It looks at the market and see what and what, the data we're talking about, what and what can sell from Nigeria. And then you can do it like a bridge, a two-way bridge. Also supporting the other country to see how they can get into the Nigerian economy. Perfect.
Oh, I'm telling you, this is incredible. AfCFTA is a game changer. I love because it has also created competition, like the sense of urgency to compete. Because here's the thing, like if Nigeria doesn't do everything you're saying, somebody else will, and they are already planning.
Somebody else will do it. No, the truth of the matter is that even in the Sogosasha in China, in Japan is private now, public-private. Somebody else will come in and do it. Somebody else will see the vacuum and say, look at this, is a huge vacuum. The reason they've not seen that vacuum is because there's no data. There is no data to capture the amount of informal export that is leaving Nigeria to the West Africa sub-region and Africa as a whole. If you get the data and you see the figure, you will know there is this big market, because a trader eliminates the role of informal export over time. It eliminates the role of informal export, because the difference, an informal exporter wants to go through the back door to be able to arrive the destination cheap. The same way the trade house is established for you to arrive in at a cheap price. And because it's a trade house functioning for the benefit of MSMEs, you can get a special recognition status from the government of Nigeria. The border was closed, some companies were given some status. If there was a trade house that represents all SMEs, it is easier for you to make a case to say, let our people too also do what? Go.
And be in there, representation. So one of the I think you and I have spoken offline. One of the key message I tell people is get into a community, get into an association. The opportunities coming. One individual, you will sweat. It's a lot.
It's tough.
It's tough.
You want to export, you need a warehouse, you need a store, you need a house to put your staff, you need an official car. But an export does not pick up. It radiates like this. It's like this. It doesn't go like this. No. They have to be aware of the product. You have to buy their mind. You have to do marketing. It takes some time to grow. But your overheads and costs is running continuously. So it's difficult for a small SME to engage in that. He will finish all his capital. But using the platform of a trader, and where the platform also helps is the economic xenophobic attack that we're getting. It eliminates it, and it grows the African region as a whole. Let me tell you how it grows the African region as a whole. Now,